Welcome back, and you're watching Market Fatafat on ET now with me, Vinny Motiwal, along with me, Shrishti Sharma as well. And now on the technicals, we are joined by Osho Krishan as well. Osho, very good afternoon to you as well, and thank you so much for joining with us on Market Fatafat. Let's start with your first stock then. You've picked out Max Healthcare for us, and when I'm looking at it in terms of the returns, last 6 months, approximately 39 to 40% returns is what we're seeing coming in there. Now, what is the upside that we should be expecting? At 612, would you say it's still the right time to pick this one?
Very good afternoon, everyone. Well, talking about Max Health, yes, in this financial year, this counter has moved approximately 40%. And from here onwards, we can again expect a target of nearly 30 to 40 points in the short-term run. Because overall, first of all, the technical parameters are looking very positive. Overall, the technical structure is on the higher high, higher lows pattern. And from past 2 to 3 weeks, the stock is consolidating in a narrow zone. So we are expecting that once a consolidation zone breakout above 620 happens, then from these levels, we can even see 645 to 650 levels to get tested in the short-term period. So we are keeping a bullish view in this counter, and any breakthrough above 620 will be adding more 25 to 30 points in this counter.
Okay, moving on, and Lisa, coming to you for the next counter, there seems to be no stopping for SJVN, has been in the buzz for almost a week now, and today itself the stock is sitting with a gains of 6%. Tell us what's the latest news flow on this.
It has also touched a new record high and this is on the back of strong order wins in the last 1 week. They've got multiple orders. It has gone up 37%, and in the last 2 days it's up 25%. Well, the government of Arunachal Pradesh, they have allotted 5 projects totaling 5,097 megawatts to SJVN, and this entails an investment of around 50,000 crore. And last week they received an order from Punjab State Corporation Limited, and this is for the development and procurement of 1,200 megawatts of solar power. This entails an investment of 7,000 crore. And they have also signed an MOU with REC Limited, and this is for a massive financial boost of 50,000 crore, and this is for renewable energy resources and also other conventional resources. So that is on SJVN. It's gained almost 37% in the last YTD basis. On YTD basis also the stock is up around 70%. So that's SJVN trading at its all-time high today's session.
We want to talk about the next stock, and that is CMS Info Systems. That one is in focus because Jefferies has retained a buy on this one, but they've raised the target price to 470 rupees per share for CMS Info System. Now, what they believe is that the Q1 of FY24, CMS reported a YOY growth. When you look at it, a 22% growth in terms of the profitability of the company. The revenue growth was a tad bit softer at 13% and understated due to the seasonal and short-term issues that are there. Now, they believe that still the earnings grew well and margin profile also improved, and ATM sourcing momentum is on track, which is along with the shift to the lower currency notes, and the ramp up of the remote monitoring systems should be something that should aid the 18% profit. Now, over a long term, and the CAGR they're expecting over the next 3 years to be a good growth of 18% in terms of the profit. That's what they've highlighted, and they've raised the target price to 470 rupees per share. Keeping an eye out on this one today.
Okay, moving on, let's shift focus to Ajanta Pharma now. Osho, this is the counter that is on your radar, and all these pharma names are showing strong resilience despite a weaker market. So for Ajanta Pharma, which is already up 27% in the past 6 months, how much more upside do you see?
For Ajanta Pharma, it has made a very significant technical breakout on the daily time frame, because on the levels of 1400, we can see a double bottom formation in Ajanta Pharma. So in the month of June, it has given a breakout around 1400 zone, and again it has retested the neckline of the same breakout. So again, it has given an opportunity to re-enter in this counter, and on the basis of the formation that it has made, we can expect the upside target of nearly 1600 and 1650 in a short-term run. So basically, we are very much optimistic in this counter, and the first target that we are expecting is 1600, which is approximately 70-80 more points from here onwards, and the final target will be of 1650 in positional basis. Let's say 1 to 2 trading weeks will be the time frame that one can expect these targets to come in this counter.
Okay, keep an eye out on those levels for Ajanta Pharma. Let's move on and talk about Spandana Sphoorty. And Harsh, why is this one in focus today? What is the reason that you picked out this stock for us? It's down almost 3% as of now.
Well, yes, largely on the back of numbers, Vinny, and, very correctly observed, the stock may be down 3%. But let's first have a look at the numbers itself. We saw, very strong set of numbers coming through. We saw AUM growth of nearly 60% on a year-on-year basis, 4% uptake sequentially. You saw disbursements go up 26% on an already very high base. You're seeing, largely with regard to the NIMs as well as the NII, the growth is extremely strong as well. You saw NII virtually double up, and you saw your NIMs go up to nearly 14.2 odd percent from the below 14% mark in Q4, which is already quite elevated. So you're seeing good traction across the board from Spandana. You're seeing operating profit go up from 50 crore to almost 200 crore. You're seeing profit after tax at 120 crore versus a loss of 200 crore. So across the board, you're seeing extremely strong performance. Largely what we're seeing is that if you look at the stock trajectory over the last 5 days or so, the stock is up 6% despite the fall today of nearly 3%. So roughly the stock had run up, very, very early on, even before the results. And, currently the stock is down, probably some amount of profit booking coming through on the counter.
Okay, moving on, let's shift focus to another pharma name, that is Astroica Pharma India, and this particular counter has seen a rise of as much as 3.5%, but now it's sitting with the gains of 1.5%, and that's the highest level today that the stock has touched after 14th of June. And if we look at the trigger for this one, the company said that they have received permission from DG Drug Controller General of India to import the pharmaceutical formulations of dapagliflozin tablets, and they say that this particular drug is for the heart disease treatment in the adults. On the back of the not coming in from the regulator itself, the stock is seeing a decent up move in today's trading session.
Absolutely, a decent up move over there, and obviously always putting in those googlies in terms of the medical names that come in. All the pharma names always have those words coming in there. But yes, holding on to gains of 1.4%, that's AstraZeneca Pharma for you all. Let's move on and talk about a paper stock, and these are JK Paper that reported its numbers. How are the numbers looking like? Because the stock surely saw a good amount of gains and still holding on to gains this morning as well.
Right, decent earnings coming in from JK Paper. They reported revenue growth of around 16% on year-on-year basis, and that stood at around 1,664 crore. It also reported an 18% jump in its net profit to 313 crore. The management said that the results have been improved due to the acquisition of the corrugation business last year and better performance by the Sirpur paper mills with increased volumes as well as higher sales realization. But the packaging board business, that witnessed a drop in its volumes and sales realization, and that was because of the high pulp carrying cost. And the company also announced that it would be setting up a hardwood bleach chemical thermomechanical pulp plant at its Gujarat facility, and it will be at a capacity of 1,25,000 ADM per annum, and this would be subject to requisite approvals as well as clearances, and they will be investing around 650 crore for the same, and this will entail a mix of both internal accruals as well as debt. So that's JK Paper. It's trending up around 4% as we speak.
Moving on, and Osho, Garden Reach, Shipbuilders, all these defense-related counters seeing no stopping. And from the pack, you have picked up this one, which is already up 26% in the past 6 months. How are the charts looking like for this one and the next targets?
See, the GRSE counter has given a breakout from the levels of 550. And post that breakout, it has sustained on the higher levels. So if we will be talking about the technical perspective, then from here onwards, we can again see a good strong move towards the level of 650 on immediate basis. Looking at the overall technical structure, it has formed a flag and pennant pattern breakout around the levels of 550, 560 zone. And from there onwards, one can expect more 40 to 50 points of upside rally in short-term period. So we are also having a very bullish approach in this counter and expecting 650 on immediate basis. And after that also we are having a bullish stance in this counter. But we will be waiting for 650 to get tested once. And again, we will be reviewing this counter for further upside movement.
Okay, surely keep an eye out on those levels for Garden Reach. Let's move on, talk about Shoppers Stop. And Harsh, how are the numbers looking like for Shoppers Stop? What are they doing? Did it seem like the viewers and everyone went shopping, or was it a miss on the shopping front?
Well, definitely top line expanded, Vinny. So it seems a lot of us were shopping, and what we're seeing on the revenue front is it was up roughly 5% on a year-on-year basis. Largely you would expect something better with regard to that number. Let's also look at EBITDA. EBITDA went up around 6 odd percent. 172 crore is where the EBITDA number came in at. So you saw a bit of margin shoring up coming through. You saw EBITDA margins at 17.3% versus 17.1%, up roughly around 15 bips or so. And profit though took a bit of a hit. It was down 37% on a year-on-year basis. Net profit came in at 14 crore versus 23 crore. But the more important metric to look at is that EBITDA margin. EBITDA margins coming in better than expected is definitely a plus. You can see a 0.5% uptick on the stock today on the back of that.
Let's move on and talk about Chennai Petrol then, and why is this one in focus? This is taking a beating in trade today, and when you look at the numbers, yes, weakness seen in the numbers on a year-on-year basis. The revenues are down by 35%. The net profit of the company seeing a decline of almost 76% as well, and operating performance, that's also seen a weakness. Whether you look at it in terms of the operating profit, that's the EBITDA performance, that's down by 72%, and the margins have seen a sharp contraction. EBITDA margin just came in at 5.3% versus 12.4% last year, so 700 basis point contraction in margins. Also, the debt of the company, when you look at that figure also that has come in, that also has seen an increase, and that has spooked the market as well. So, that clear pressure that has been seen on Chennai Petrol today, stock is trading almost at the day's lowest point as of now as well, Trishti.
Okay, so that's about Chennai Petrol, definitely under pressure on the back of so many reasons. But moving on, and Osho, coming to you for this one, you have picked up Cochin Shipyard. How are the charts looking like for this one and the next stocks as well?
See, Cochin Shipyard is looking very aggressive as of now, as it has entered the uncharted territory, and looking at the technical setup, it has formed a rounding bottom on the daily time frame. So overall, on the higher risk scale, we are expecting the upside target, depending on the technical setup, is of 850, but that is something on the medium to long term perspective. In short term, any dip comes towards 650, 660 zone. There one should try to accumulate this counter for immediate upside target of 740. But on the higher scale, higher time frame, one should be very much eager for this counter to come across the levels of 800 and 850 from medium to long term perspective.
On, and let's focus to some of the earnings, and on your bottom of your screen you will see Mahindra Holidays number flashing, and a disappointing set coming in this time, because if you'll see it in the revenue though is up 2% on a YY basis, but look at the profit figure, that is just 0.18 crores reported by the company, and that's down 99%, and that's why you are seeing the fall in Mahindra Holidays, because if we look at the EBITDA figure, that's also seen a decline of 16% on a YY basis, and the margins have now slipped to 13.7% versus 16.5%. So not a great set coming in from Mahindra Holidays. Seems like, Winnie, that people must have not travelled.
And that was, we were expecting the travel, what
Absolutely,
we were hearing all throughout is that, the travel and everyone was travelling. So that is a concern, we'll wait out for more details on that, but 4% downtick clearly seen on the charts after the numbers, and sudden fall that has come in. So that is something that will be interesting to watch out from the overall travel sector as well then, because how everyone else is shaping up in terms of demand then.
Well, yes, absolutely. Though the sentiment was positive, but the numbers are not reflecting the same story. We're moving on, and let's shift focus to SRF now, because post the earnings, Morgan Stanley has come up with their note where they maintain their overweight rating on this particular counter with a target price of 2,986 rupees, and that's a significant upside from the current market price, because they say that the Q1, though, amid the weaker volumes in the refrigerant gases and the near trough earnings in packaging, these factors did impact the earnings, but believe that the challenges highlighted pose 18 to 20% downside to the earnings estimate. The packaging EBIT rose quarter on quarter and should be steadily improved from the March lows. So that was the commentary coming in from Morgan Stanley. But a while ago, the company also came up with the outlook where they expect better performance in the second half of FY24. The long-term story remains intact is what SRF management is highlighting. And they also shared strong demand outlook for their HFC segment. So that's why we are seeing SRF sitting near the day's highest point as of now.
Absolutely, keeping an eye out on SRF. Let's move on and talk about Relaxo Footwear. And Lisa, what is it in terms of the numbers that we're seeing? I believe it's in focus on the back of its numbers.
Yeah, right. The revenue that rose 10.7% year on year to 738 crore, and the growth was mainly driven by strong recovery in the volumes across open footwear. The EBITDA was up 24.8% and stood at 107 crore in the first quarter, and margin was at 14.6% compared to 12.9% in last year. So a good set of number was reported, and the management MD Ramesh Kumar Dua, he said that there was a significant growth in both the open as well as the closed footwear categories, and the declining raw material prices helped in the margin expansion. It led to a better operating efficiency as well as profitability for the quarter. But seems like the stock is not reacting to it, to the good numbers, and it's trading flat as we speak.
Okay, moving on, and let's focus to Power Grid now. Osho, this is the counter, and since morning itself has been holding a gains of over 1% now. How much more upside do you believe that Power Grid has onto the charts?
See, overall the power counter is looking very positive as of now. So Power Grid being one of the largest firms from the power sector, we are expecting a decent up rally, because in the previous months we have seen a decent correction from the levels of 262 levels to 237. So as of now, the stock has consolidated, and on technical patterns, it has given a positive crossover. So from here onwards, one can expect the upside target of nearly 258 to 260 on a very short-term perspective. So this should be the immediate target that one can expect from Power Grid. And once it again reaches above the level of 262, then from there onwards, we can again see a fresh leg of rally in this counter. But for short-term perspective, 258 to 260 should be the first target for the short-term traders.
Okay, surely keeping an eye out on those targets for Power Grid. But let's move on and then talk about Poonawalla Fincorp, Harsh. And why is this one in focus today? What's the reason for this?
Well, yes, so management commentary coming through for Poonawalla Fincorp. Of course, a strong set of numbers also coming through. What we're being told by the management is the fact that the weighted credit cost guidance will be in the band of 80 basis points to 120 basis points, which is 0.8% to 1.2%. The OPEX to AUM for FY24 will be roughly 4% or thereabouts. They've started cleaning the legacy book. They're expecting that the balances will largely be NPAs, and therefore they are providing for that. The gross credit cost is roughly 27 odd crore in Q1 FY24, net credit cost of just about 6 crore, including some fair value gains coming through. You're also seeing collections in the infra sector to ensure that the credit cost guidance is met, and stage 1, stage 2, stage 3 provisioning will be at roughly 1.4% or thereabouts. Some of this, of course, coming through largely on the back of the legacy book that Poonawalla Fincorp has on, of course, shifting away from the legacy book. You are seeing a lot of levers with regard to improving cost of borrowings as well as operating leverage starting to kick through, and of course a lot of growth also coming through for Poonawalla, and on the back of that, stock is up roughly 3% or thereabouts.
Okay, let's move on and talk about the next one, and that is ITC. ITC in focus again today as well. You know, yesterday what came in as an announcement was the demerger of the hotel business. They announced an alternate structure for the hotel business that was in talks for the longest period of time, and the structure that they announced is that the ITC will now hold 40% stake in this new entity, the hotel business, and 60% will be for the shareholders. Now, seems like the street was not too happy with that alternate structure they announced. They're not, and actually retail investors should know that this doesn't impact them at all, because 60% shareholding they'll directly get in the hotel business, and 40% is what they'll get through ITC. So as a retail investor, you don't have any worry. You know, I think that was a bit of a worry and a concern of confusion that a lot of these retail investors also had. So let's keep an eye out on that. But overall, that fall is coming in because some of the analysts were expecting a bit of a different structure that was coming in over there. Let's not forget the run-up that we've seen in ITC on a YTD basis has been more than 50% as well. So already a run-up, and yes, there will be a discount in the holding company discount that comes into factor as well. So that is a factor that comes into play. But all in all the brokerages have given this demerger announcement a thumbs up. Yes, let's not forget there's always a sell on news kind of a flow that comes in as well. Some bit of a profit booking there as well, and that is what we're seeing in ITC. But as of now, from the day's lowest point, we are seeing a recovery. At one point it was down as much as 3%. We have seen that recovery coming in here today in ITC as well.
Well, yes, absolutely, Winnie, and that was your news break getting confirmed on ITC with the further details being shared by the management. But moving on, and let's shift focus to some of the other earnings, and I'm going to talk about Sundaram Clayton. That particular counter was in focus on the back of earnings just came back a couple of minutes ago. That particular counter is seeing a sharp spike of 6% on your screens. This company is associated with the TVS group and this time has delivered a good set, I would say, because on a YOY basis, the revenue has seen a jump of 23.5%. The net profit is up 23% on a YOY basis. As well, if we look at the margins, that has seen an expansion of 61 basis points to 13.1% is where the EBITDA margin of the company is standing, as well as a jump of almost 30% onto the EBITDA figure. TVS Motors is also up, and the ditto we can say for Sundaram Clayton post the earnings, seeing a sharp spike of 6% right now.
Okay, let's move on and then Osho, coming to you for NTPC. How are you looking at the charts for this one? What is it that you are expecting in terms of targets here for NTPC now?
The NTPC in today's session has given a fresh breakout. If we will be seeing the overall setup in the current month, then we have seen a V-shaped recovery in this counter. At the early start of the month, the counter has dipped from the levels of 197 towards 185, 187 levels. And again, in today's session, it has recouped from the losses towards the level of 200. So from here onwards, one can expect the immediate upside target of nearly 207 to 210 on a very short-term perspective. While looking at the overall trend for this counter, it is on a cycle of higher highs, higher lows. So we are expecting a decent up move from medium-term perspective. But for short-term traders, one can expect a target of 207 to 210 in a very short-term period, let's say 1 to 2 trading sessions.
Okay, let's move on and talk about Jubilant FoodWorks. That's the numbers and that is flashing on your screen coming in right now as well. What we are seeing is that in terms of the revenues of the company that have come in at 1,335 crores. Yes, that's in line with what we were expecting at ET. Now, profits of the company coming in at around... when you look at the profits of the company that have come in at 29 crores is what we're seeing. I believe there could be a one-off that we were seeing because we were expecting...
But Winnie, that's a consolidated number.
Numbers, yeah. Okay, I believe, yes. And we should be looking at the standalone numbers that we should be looking at. So let's keep and check on that one as well. Right now, the consolidated numbers is what we're seeing coming in. Revenue is at 1,310 crores versus the ET now forward, as you cannot compare that because we have given standalone basis. So let's keep an eye out on the numbers, but we have seen a sharp uptick coming in and seems like it's a decent set of numbers that has come in from Jubilant FoodWorks, Shrishti.
Well, yes, as of now, what we are picking from agency is 75 crores of the profit, which is actually a little down to the 18-hour estimate. But we'll get back to you, Winnie, for more details. But till then, let's shift focus to Global Spirits now. This particular counter is also in focus. This particular counter is also in focus, and Global Spirit on your stock, you will see that's down 6.5% after the management says that the disruption in the availability of the raw material at the West Bengal and Jharkhand unit has been reported, suspended surplus of the surplus rice for the purpose of production of ethanol, and they expect this supply disruption to be temporary one, where the company is shifting its feedstock from the surplus rice to alternative raw materials. And on the back of this particular update, we are seeing Global Spirit down in trade today, nearly with a cuts of 6.5%.
Okay, let's move on and talk about Sumitomo as well as Bayer. And why are both these stocks in focus today, Lisa? What's the news for them?
Well, German-based pharma and chemical company Bayer Group, they have announced they have actually cut their guidance, and they have downgraded their guidance, which is actually a negative read-through for chemical companies, for agro-based companies like UPL, Sumitomo, as well as Bayer Crop Science. They have adjusted their 2023 outlook downwards, and mainly this is due to significant further decline in the sales of glyphosate-based products. Now, glyphosate is sold even by Sumitomo as well as UPL. And for a calendar year 2023, Bayer has anticipated sales of 48.5 to 49.5 billion euros, and against a previous outlook of around 51 to 52 billion euros. And glyphosate, which is an active ingredient in many weed killers, that is the main reason for this downward downgrade. And EBITDA is also expected to be at 11.3 to 11.8 billion euros against a previous outlook of 12.5 to 13 billion euros. So the revised guidance of Bayer will have an impact even on these stocks, and that's why we can see stocks like Sumitomo, it's trading flat, but Bayer Crop Science is down around 2%, and even UPL, that is also down more than 1% as we speak.
Those are the two stocks that you all should be keeping an eye out on as well. But with that, viewers, we're absolutely out of time on this edition of Market Fatafat on ET now. Thank you so much, Osho, Kunal, Lisa, as well as Harsh for joining in with us. And it's a goodbye from Shrishti, myself, as well as the team who put this show together.